never-ending happiness. You can always see the sun, day or night. So when you call up that shrink in Beverly Hills, you know the one, doctor, everything will be alright. Instead of asking him how much of your time is left, ask him how much of your mind, baby. Cause in this life, things are much harder than in the afterworld. This life, you're on your own. And if the elevator tries to break you down, go crazy, punch a higher floor.
Good morning. This is Mr. Not Advice. It is Saturday, November 1st. Holy cow. Unbelievable it's already November. Guys are lucky because I was going to start off with Christmas music since I'm already in the mood, but obviously we haven't even had Thanksgiving yet this year, so got a lot to go over this week. It's been a sort of a crazy week. Yeah. Had a lot of news coming out of China, coming out of, as well as with EOSE, and the government shutdown. So let's take a look at some market-specific charts here today. So if you look at the month of October, the Mag 7 did very well, but it was really in the last week that the Mag 7 finally pushed off, and that was because of earnings this week. And as I predicted that this earnings season would be strong, which it was, however, only really the Mag 7 participated. The red is the Mag 7, and the blue line here is the other 493 stocks, which went nowhere this month. So don't be fooled when you hear about indexes at record highs. As I have been commenting for the last, 2 weeks, 3 weeks, breath is terrible right now. If we look at the put call skew, and what this shows is that while we have the Mag 7 moving up, we have people are positioned heavily in the calls. So, and that'd be the blue line here, puts, right? So the market participants are heavily positioned for further upside with very little protection to the downside. Is this a warning flag? Sure. You always want to see broad participation in the market, but as I've taught you, you want the leaders of the market to pull the rest of the market up. And we were lagging. The leaders did not really take off until the last week of October. Now that that's happened, that the Mag 7 has finally broken out, I suspect we're going to see some buying across the rest of the 493 of the S&P 500. Obviously, not a guarantee. There is substantial weakness in the market, and I think we need to be careful to remember that bull markets, they have been climbing a wall of worry since last April, and we have been long that wall of worry. So I will continue to position size relative to the overall risk in the market, which means that most often I will scale down my position sizing. While my maximum position is 4% for swing trades, I have been putting out trade ideas to my members somewhere in the 2 and 3%. I don't know if we've had a 4% trade in weeks, quite frankly. So what we have here is the advanced decline line. First, we have the S&P 500 index right here moving up, but as is evidenced by the 493 stocks of the S&P 500 X Mag 7, the rest of the market has done pretty much nothing. And we've had many more decliners than advancers. So yes, could this market turn? Absolutely. But I don't think it's going to happen, and I'll show you why here. One of the things that I've been saying in my end of the day updates is we need to start watching or keep an eye on the credit markets. This is the Oracle chart. So while the price of Oracle, the stock price, has been going up, their debt value, the bonds, have been going down. That's not something you typically want to see because the debt market is massive compared to the equity market. Does this mean that Oracle is about to crash? No. What this means, though, is that if there is a hiccup in the overall broader market or in the macro data, Oracle is going to probably be much more susceptible, the stock price, to falling off than any of the other tech sectors or tech companies, let's say. In addition, we had Bitcoin. For the first time in 6 years, the month of October was red. And that's not something you really want to see. Um, that broke a 6 year, okay, a 6 year trend that the month of October was green. Now, the month of November, not as strong. As you can see here in November, we have a lot more red days. So we don't have the high probability that the month of October provided. What's going to drive Bitcoin higher? I think two things. I think number one, we're going to see continued money supply come into the markets globally, as well as the calming down of tariff issues with China. I think that's also going to they're going to try to move Bitcoin up this month too. I don't know. We'll see what happens. I thought they would try in October and they did. One other data point that, again, when you see these broad macro data points, understand that it takes a long time for macro data to work itself into the price action of either the market or individual stocks. I see a lot of traders who will, or investors that will take a broad data point and immediately trade because they trade that asset because they're seeing something that, let's say, is a yellow warning light, but what they're misunderstanding is it's one single data point. So I've seen a lot about CapEx spending from Amazon, Google, Meta, and Microsoft and how they're funding that through debt. Well, guess what? That's what they've done before. They always fund it through debt. And CapEx spending, as projected by these tech leaders that are spending an ungodly amount on data centers, is not going to slow down as long as the debt market has an appetite for their paper, for their debt. And why wouldn't they? From an investor standpoint, these are the leaders of the economy right now. So buying their debt is not as aggressive as perhaps buying, oh, I don't know, debt in a small cap company or in a industrial company. This is where the growth will be. It won't be a smooth line, but certainly from my perspective, if I was going to be a debt purchaser, absolutely I'd be looking to these leaders of the economy right now. But again, you're going to have traders and investors who are misunderstanding this type of data point and immediately shorting it or calling for, a crash in these stocks. Crashes occur and they come from out of the blue. It's very rare that somebody's able to predict the exact moment or exact time frame that a crash is going to occur. Think about all the news reports and experts that you've read over the last, oh, I don't know, since April of 2025 that have predicted a crash. And yet here we are. The market is at all time highs and the leaders are back to leading. This is the type of setup going into year end that I like to see. Weakness in the S&P 500. This is a Bloomberg screenshot. It's almost entirely been in retail. Retail has been getting smashed. A couple of reasons for that. Uh, Tariffs, right? The government shutdown. Those things alone have put a tremendous amount of pressure on retail, whether that's retail from, so here's J&J snack food, here's Smucker's, Treehouse Foods. So we have a couple, I wouldn't say a double whammy, but a triple whammy going on. You had tariffs, which all these companies from their supply chains have had to absorb increase materials costs. Number two, you had the shutdown of the federal government, which leads to number three. The shutdown of the federal government creates concern that if it lasts too long, we'll see consumer spending drop off. And then the third thing is most of these companies are very sensitive to SNAP, SNAP benefits. They benefit because that government money is going into people buying, well, junk food, crap food. And a lot of these companies, that's exactly what they sell. So, will this industry eventually reverse? Probably at some point. This is the XRT. So, this is the retail ETF. And again, everyone's calling as if it's Armageddon. It's not Armageddon, even for retailers. Now, I do expect that the Christmas season is going to be weaker than expected, but I don't know how weak that the market is expecting it to be. We have subprime auto loans delinquencies have now risen above the 2009 level. That's frightening. When you start seeing people not able to pay for their transportation, which takes them to jobs, right? That is a concern. Is it now at a point where I expect a collapse? We've sort of seen a soft rolling collapse with Tricolor and some of the subprime lenders in the auto loan business bankrupt or having to go to the markets and refi their debt. I expect that to continue probably until the new year, quite frankly. So yes, there's going to be pressure on the markets from the retail sector, but I don't think that pressure is going to be permanent, nor do I think it will be enough to drag the rest of the market down. Why? Because as long as there's AI spending going on, and there is, as is evidenced by the most recent earning reports of the Mag 7, as long as there's AI spending and projected AI spending going on, the market's going to have a very difficult time at getting any substantial move downward. So I remain bullish. And then with all the bad news, let's take a look at this. So I know there was a lot of chatter about the Hindenburg omen this year. Interestingly, as I did some study about the Hindenburg omen, the last three times it has occurred, the market went higher for at least 2.5 months before the correction. So, did the market correct in those time periods, those instances, because of the Hindenburg omen? No. The Hindenburg omen is merely a graphical data point. It is not a tradable signal because if you do and go short, on average, you're going to have another 2.5 months where the trade's going to go against you. So the best 6 months of the year are now here, November to April, plus 7%. 76% of the time, the market is higher. While, as we saw with Bitcoin, that seasonality or fractal seasonality cannot be depended on to be 100% accurate. It is something to watch because the majority of the market knows this too. Remember, we've got tailwinds now going into the end of the year. When I talk about tailwinds, I'm talking about structural, right? We have mutual funds year end October 31st. Some of them will do their year end in December. They have been tax loss selling. Also, and that money is going to have to go back into the market. We also have pension funds were sellers at the end of the month of I think $5 billion worth of equities. That's going to flip also because that was also tax loss selling. So I think that we're probably beyond the structural selling that typically occurs during this time period. And unless we get some level of an outlier event, and that could come obviously via China, even though that they're making nice about it and the US is making nice about it, nothing really changed as a result of that APAC summit. Certainly, the from my perspective of 33 years of experience, I expect the market to go up for the remaining 2 months of the year. Not straight up, obviously. Let's look at some charts this week. What do we have? All right. As I always do, let's start with the S&P 500, right? Here's the S&P 500. Finally broke above the level. It is trying to hold this breakout level. 6920 to, let's call it 6800, is now the battle zone between here and here. And until we break one of those levels, the market is going to continue to move sideways. And when I say sideways, it may, mess around up here. Remember what I just said. Structurally, there should be a fair amount of capital to the buy side into the end of the year. Okay. On the Qs, technology, same thing. I think that as long as we hold the 600 level, I think the Qs will be fine. Now that we're beyond the Mag 7 earnings, the market's going to trade and look forward probably another quarter to 2 quarters. And while you have a lot of very smart people talking about, oh, well, their CapEx spending on AI can't continue at this level. Well, of course it can't. Okay. But that doesn't mean you all of a sudden jump ship and try to predict if and when that ship starts to take on heavy water. It's not happening yet. So trying to be predictive based off of macro data points is probably one of the biggest lies that the industry tells you, right? What do they tell you? They tell you find a company, learn everything you can about it, buy it. If it goes down, buy some more. Well, nowhere in there did I hear anything about price. Nowhere in there did I hear anything about selling that company. So macro is very difficult. Macro to me is like the wind, right? It's either it's at your back or it's in your face. And we just went through a period where it was both in our face and at our back at different times in the month. But ultimately, the market continued to move forward. So despite the headwinds, market went up. And I think that those headwinds are going to start being overwhelmed with the tailwinds, which is quite frankly just money supply, money coming into the market. The Russell 2000 was weaker for the month of October, and that's pretty makes a lot of sense to me. So you know that I look for the Russell 2000 as the dash for trash when managers are trying to find stocks that haven't gone up too much that they can get into so they can have some excess performance into the end of the year. What did I tell you we needed before that happened? We needed one of the indexes to break out to new highs. Well, we got two of them. Okay. And then we need, and quite frankly, while we have them breaking out to new highs, as I went over, they're right now consolidating on a very short term weekly basis, days, I mean. So I do expect that the Russell's going to break out of this double top, and hopefully we'll be able to get a chance at trading that via one of the Russell ETFs. For all the gnashing of teeth and all the worry and doubt, the VIX looks fine. And in fact, we're now entering a period historically when the VIX does go down. So this might be a little bit different this time because we have Jay Powell, which I will speak about a little bit, coming out and adding a little bit. People said, oh, it was a trap door that he set. No, he threw some cold water on the market expectations. And this is very typical of what he does, whether it's political or not. I think it is. As you heard me say in my end of the day update, I think he's a dick for doing it. But I believe interest rates are going to continue to come down. And whether I think we'll get another cut, I think the odds are at 65%. We will get another cut in December. And that's going to, while it may not be like rocket fuel, it's certainly not going to be headwind into the market, right? Bears right now are hanging on to anything they possibly can, but they've been wrong since April. So why all of a sudden would I switch to a bearish position? I'm not going to do it. So VIX is showing almost no concern. Tesla continues to just be stuck in this range. It's going to do that. I don't see any news that's planned out of Tesla through the end of the year. So if Tesla goes up, I think it's going to either be new information that comes out that's company specific, or the rest of the Mag 7 are going to pull it up. 10-year yield is back above 4%, which is this 4.0 level, something that I would expect after Powell said that there may not be a rate cut in December. The 10-year yield is, in my mind, temporarily up. TLT, which is the inverse of the 20-year Treasury bond, I was looking for a break all the way up here. We came close. We did not get it. But let's look at this percent range. I mean, it literally is like 2.33%. So I remain on. I still want to get long Tesla long term, longer term, not or no, I'm sorry, Tesla, TLT longer term, because I think rates are going to continue to come down. I don't think there's anything the Fed's going to be able to do about that, because I think it's a structural issue in rates. PCT just crapping its pants. Now that we're beyond earnings, I will look to short PCT. PPTA, one of our favorites, a lot of the metals companies, if we look at gold and silver, okay, a lot of the metals miners have really sold off heavily. It's interesting. I was talking to one of our members who is very knowledgeable about it, and we were talking about those royalty companies. Well, a royalty company, yes, the price of gold or silver is going to affect it to some degree, but these royalty companies, they have contracts out for years. So royalty company is when a company is taking their gold or their silver that they're mining and paying dividends off of it to investors. So this is gold on a daily basis, and 4,000 is the battle zone right now. I want nothing to do with gold until we get back above this level here, probably 4,200. Let the market figure this out. Do I think that we're going to have this same move? No, not unless we get data points that show that there's more inflation bleeding into the global economy, and I'm not seeing that at all. So Nvidia finally broke out, and based on earnings, but mostly based on their just incredible amount of capex spending that they plan for AI development. Will this last? Probably. I think I would love to get long Nvidia, but it'll be up here at a new high. Meta got hammered because they said their expenses were larger than expected, but they also reported record revenues and earnings. Am I going to get long Meta? No. I was looking to see one of them announced a stock split, so I'll have to figure out which one. Google also reported record numbers. I will look to get long Google on a break up here using Google's ETF that is much cheaper. It is a multiple ETF. NFX has earnings next week. I think earnings are going to dictate whether this price is able to finally break this downward channel or trend line, or if it finally breaks lower. Bank of America, which we are in, we got in here. Okay. Can you imagine if we had sold intraday? I use the daily close as my um, metric on whether or not I hold or I sell. So we did not close. This one did. And what did we get? We get a stick save. And now we're setting an all time 52-week high. So good job holding Bank of America. ARGT. We got into ARGT right here on the break and had a heck of a day on Friday. I think that Argentina is going to continue to prosper temporarily because Trump wants it to prosper, right? Malay, I think that's how you say his name. Forgive me if I'm saying it wrong. The president um, is a strong ally of President Trump. So, also, I made the comment 3 months ago that, sort of jokingly, but I made a prediction that Trump is going to invade Venezuela. Well, we have a carrier group down there. We also have airspace that has been closed to all international flights right off the border, right off the coast of Venezuela. Reports out of Zero Hedge are that Maduro has been pleading with China and Russia to send them parts to upgrade their air defense system, and thus far, nothing. So, I think that Trump is going to try for regime change? Absolutely, absolutely. So we'll have to see. Do I think that's going to crash the market? No, I don't. I don't think that'll crash the market. You're probably going to see some wicked action in oil temporarily, but I don't think it's not something that is going to affect the overall U.S. market. It's going to affect oil because I believe Venezuela is has the number one reserves in the world with the amount of oil they have, as well as rare earth minerals. So let's look at silver. Silver is the same thing. Now, I'm more inclined to take a silver trade if we can break this level. It's really the 50% retrace of this big red candle holding everything down. And we'll see what happens next week. Let's take a look at Ethereum and Bitcoin. Ethereum, great day on Friday? Not really. We really need to see this thing start trending upwards before I get excited about anything. I was looking to roll my BMNR. I was looking to roll my Ethereum, and then I got the intraday action or the next day's action was just terrible. So, yes, I've either going to roll it or I will hold it into January. I'm okay with that. And I've already had my hard discussion with my members about both of these positions. So I'm not going to belabor that point. EOSE this week had some great news that came out, the UK news, which was front run by a short report by a firm that, quite frankly, they do some really good deep dives. But I just think they're wrong when it comes to EOSC. I think they cherry pick their data and then they lie, and they flat out lied in their report. But that's okay. The stock rebounded, and I think the company did an excellent job by responding to it without responding to it. Look, could it be that the CEO fires people that don't perform? Yeah, I was that type of COO. I would fire people for not performing. So to me, that's not something that is entirely bad. The helium fire was already explained. It was testing on a cube, and the company did a great job. Now, the latest thing from the short seller, I'm not even going to mention their name because they don't deserve it, but was that they can't ship cubes over to the UK, which is sort of laughable because that problem can be easily solved by EOSE opening a production factory in the UK. Now, many of you are not going to remember, but in June of 2023, I said I'm investing in EOSE because of Cerberus, because of their connections, because of what they bring to the table. And the UK, I guess it's a sizing up of the deal in UK. The financing was handled by Cerberus. And I think we're going to continue to see that happen, whether the financing comes directly through a Cerberus owned entity or through one of their partners in the market. They are a massive, massive fund. And so I don't think that it's sort of frustrating for me because a lot of the all of a sudden EOSE bulls were the same guys and gals, mostly guys, who were spouting off that Cerberus was predatory, that this and that, and now all of a sudden they've seen the light. So whatever, I can be right on Twitter or I can make money, and I'd rather make money. So interestingly, on Wednesday, I decided to go in at the end of the day and add 10% back to my position. Woke up on Thursday morning to the short attack, which pretty much recovered almost all of it by the time the market opened. Here I am now with that 10%. I'm up 20% in 2 days. It was not a difficult trade to take because, as I told my team members, this 10%, I'm looking forward beyond earnings. I'm looking over the next 3 to 4 months. I've seen some incredibly ridiculous price targets for EOSE. I don't think EOSE is going to hit $100 next year. I also don't think it's going to be at $20 next year. So, as I put out in a tweet, if you want to find out what my target price is, you have to listen to Mr. Ray's and beginning of the year 2026 podcast. We have earnings on EOSE this week. I believe that one of the good things that could have happened here is any of the selling that was going to happen as a result of earnings, it's going to take new selling dollars because this pre-market move down wiped out a lot of the stops that were sitting there. While this chart doesn't show it because I don't have pre-market on it on my charts because I ignore it because there's no volume in it. Certainly the bounce back as well as the follow through on Friday tells me that the market is still hungry for the stock. It may very well and this, as I predicted, it was going to drift sideways to down into earnings, and that's exactly what it's been doing. So I still have some heightened anxiety going into earnings. Not that they're going to miss their earnings as much as what will the market reaction be if they don't continue to pick up the cadence and continue to announce new deals, which I expect them to do. I believe they'll do, then the stock could continue to drift for a couple months. I don't know. I don't think that's likely. If they're able to reaffirm their guidance and my gosh, if they announce another deal, then the stock I think could be materially higher by this time next week. Yeah, I do. Could be over $20. So, and I will not be a seller of my options that I just bought, which are 2027s. I bought the 2027 15s and I bought those, like I said, on Thursday. Here I am up 20%. This is EOSC is now 25% of my total portfolio. I have no interest in adding any more money to it until after earnings. I need to get some more data out of the company. And once I have that data, I'll be able to figure out how I want to deploy the rest of my capital as it's allocated to EOSE. So I did take a couple losses this week. I took a loss on Halliburton, which I think was yesterday. And that probably happened because oil was a little bit weaker. Yeah, here we go. I took a loss on Halliburton. My break level was this. I needed to get back above there on Friday, not even close, so I'm out. Will I take another shot? Sure. If I don't have any other candidates, I will. But the other positions that I opened, Bank of America, which I opened 3 days ago, that's up 15%. My ARGT is up 22%. Those are the only positions I have outside of my Ethereum and EOSE positions. I don't have anything else right now. I reminded my team members this week that no trading is not a bad thing. You know, the market's been extremely volatile. So why would we want to be in the middle of that as the market is working through its volatility through earnings? Now that we are beyond earnings season for the Mag 7, I think we had 60% of companies have already reported. Remember, I believe 85% of companies, let's see. Yeah, we've got over 60% of companies are now out of the blackout period. So that means they can continue their stock buybacks. How much is left? Probably about $200 billion. The metrics, the estimates were there were going to be about $1 trillion of buybacks this year. Well, those buybacks are going to add to the invisible hand that lifts the market, that wind at our back. It's going to be a very difficult thing. And it's going to have to come out of left field for this market to correct down. Could that happen? Absolutely. If the government shutdown doesn't end, my reading is that the Democrats are looking to reopen the government this week after the New York City election, where they're going to, I guess New York has lost its complete fucking mind by not only voting for a socialist, but a socialist that despises America. And I won't get into that, but fine. That's what they want to do. Ultimately, it's going to be pinned on the Democrats, and it should be pinned on the Democrats. But once the government shutdown ends, as long as this doesn't drag on beyond, let's call it this week or next week, I already hit my date, which was October 31st. This government shutdown now is going to start having significant effects on our economy. I'll give you an example. Yesterday, 30% of flights were canceled in the Northeast. Well, it's not just passengers moving, it's cargo. So when you start seeing airlines, and I think all four of them, or the three largest, were there with JD Vance this week, begging the Democrats to end the shutdown. They need 5 Democrats to go over the aisle to end this shutdown. So when you see that, there's some serious pain being incurred. We also had the Federal Employees Union come out and say to the Democrats, end the shutdown, end the shutdown. So while there are headwinds going into the end of the year, consumer spending, consumer credit, I think the overall market, absent, remember, the stock market is not Main Street. The stock market is always forward looking. So, and it takes time and some really deep damage in order for the stock market to start representing the pain that's happening for the everyday citizen of America. Uh, it is something that I think I learned the hard way in my 30 years of being a professional, because I would look around me, and by the grace of God, I never went through a financial period of difficulty during that time. But I'd look around me and I'd see less stores, less traffic in stores. Yes, 2008, 2020, 1999, 2001. I'd see that go on. And in the early part of my career, I'd expect that, oh man, that must mean the stocks are going to go down. No, the stock market is not representative of Main Street. Okay. Wall Street is always forward looking. So while you may look around you and you may hear these data points, it takes time for macro data to bleed into stock prices and into the overall stock market itself. The result of the China summit was nothing. I guess they're going to buy soybeans at the level they bought a year ago. Whoop-de-doo. What we were able to get out of them, and we'll see how long it takes for them to violate the condition, was a pause on tariffs, uh, specifically with rare earth minerals for a year. That's going to give the US government time to start ramping up sources as well as refinement of rare earth minerals. I think the big mistake that China just did was everyone knew that they had a big old hammer, which was they controlled the rare earth mineral business globally. Nobody thought that they would actually use that hammer and threaten, which is what they did. It didn't just scare the crap out of the US, it scared the crap out of every other country that sources from them. And I think in the end, what they are going to manage, or the result of that, is they're going to be even more isolated than they were before. You've heard me talk about it. I don't want to belabor the point, but China is a corrupt country. They have lied, they have cheated and stolen since 1999 when they were allowed to be let into the world WTO. They have abused their own trade partners, Vietnam, Indonesia, Thailand. So the rest of the world knows this. And I think all China's been able to do is they have successfully laid the groundwork for them to be even more isolated. Their domestic consumption rates are pitiful. They cannot replace the global consumption. They certainly cannot replace the US consumption with their own citizens' consumption. If they don't figure out a way, and I know their thinking is, excuse me, is they are on a 5,000 year plan. Well, they may not get a chance. The markets move a lot quicker than they used to, and countries, especially with Trump in office, move a lot quicker with policy. There's no longer these lengthy debates and think tanks. Thank God, most think tanks are run by idiots. The economy, global economies have to move quickly. I think China's done a lot more harm to itself than it wants to admit, and we'll have to see. I don't think that's going to manifest itself over the next 3 months or the next month. But if we use history as our guide, I'm pretty sure that China is going to bend the rules or break the rules at some point with this pause in the tariff situation. It's what they do. They do it all the time. Some of the big data points this week, obviously, we have NFX and EOSE earnings. First week of November, we're going to be able to see now that the Mag 7 have reported if there is an appetite for the market to go higher. I think there will be. My prediction on EOSE is I don't have a prediction, but I did get long and added almost doubled my exposure in my portfolio to EOSE last Thursday. And that was based upon conversations I had with Mr. Ray's, a couple other people. I think that EOSE 2 to 3 months out will be a materially different company based upon orders. That's what I believe. Of course, I don't have inside information. If I did, I certainly sure as shit wouldn't be sharing it with complete strangers on the internet. So hopefully you had a great or whatever you do for Halloween. Thanksgiving is later this year. So we also have that advantage where it's not going to truncate the market in the third week. It'll wait to the fourth week. I think the only large macro event that's out there right now is the government shutdown. And there is a tremendous amount of pressure for that to end. I think when that happens, how could I see this playing out? Government shutdown ends in the next week or two. We get another cut in December, and that's all the market will need to rally into the end of the year. I think a lot of market participants are used to markets rallying with zero concern for the downside, right? When there's a complete takeover of bullishness and a tremendous amount of irresponsibility in the market. Well, this type of market where we climb a wall of worry is more typical than those type of blow off tops type markets. It is very rare to see markets, as I said a couple weeks ago, at all-time highs or very close to all-time highs, and yet to see investor positioning or sentiment at extreme fear. So I think there are going to be investors. Yes, there's risk. Okay, I showed you put the call skew. There's not a lot of puts to the downside. You could look at that and say, "Oh my gosh, look at that pocket of air of puts and lack of puts and the market." Yeah, it could, but just because there's not doesn't mean that the market is going to automatically sell into that. The other reason there's not a lot of puts is because market participants think the market's going to go up. Some of these things are so easily telegraphed if, especially for perma bears, if they just remove their glasses and see what is the data actually telling you. Well, the data is telling you market's going to go up. So a little bit shorter review this week. I will be traveling next weekend, so there will not be a weekend update. However, I'll have my end of the week or end of the day reports this week. And as always, I hope you have a safe week and a profitable week. And you'll probably want to listen to my end of the day if you're a Discord member. And if you're not, you should become one after EOSE and NFX earnings this week. All right, have a great weekend.
So I'm about my business and I'm running with it now. They don't wanna give it up, we gon' make it out. Got to get it while I'm living. All I ever hear is the clock tick, tick, ticking. So I'm about my business and I'm running with it now. They don't wanna give it up, we gon' make it out. It don't get no greater. Feel like I'm on fire. Feel like I'm Johnny Storm. Feel like I'm volatile, explosive. Get close enough, you notice. Your girl act out of character when she see me approaching. Ain't poaching, I'm just saying it's nothing.